Hey, how you doing? Emmett Dempsey with Treasure Coast Mortgage here in Florida. Today we're talking about the seller rate buy down, what it is, how it can help you as a buyer, as a seller, as a real estate agent or realtor. Because here's what's going on, guys. I know there's some funny memes and videos out there about that Apple that anybody will buy for anything. But in case you haven't noticed, things are starting to slow down a little bit, starting to mellow out. In fact, here's an article here I'll share that talks about how about 20% of listings these days have price drops. Okay. So, maybe that's just sellers coming out of the clouds from extremely over ask offers, or it's softening. But no matter how you slice it, there is a shift in the market. I don't believe there's any kind of crash on the horizon just because of supply and demand and demographics. But I think the red hot market of last year is changing. So how do we mitigate that? And this might not be pertinent depending on what area of the country you're in or anything like that. But this is just something that I want to talk to you about. It's called a seller buy down or seller rate buy down, using points to buy down the rate. Okay. But instead of, if you're a seller and, and if you're going to be asked to drop your price, you're getting lower offers. Instead of accepting a lower price, you keep your price up and give half of that requested rate buy down in the form of a seller credit to buy down the buyer's rate. Okay. So how does that work exactly? All right. So here is an example. So this is basically a $500,000 purchase price. Okay, $500,000 purchase price, 450, 5875 rate, payment of 3218. Okay, so the buyer says, no, I want you to drop your price by 20,000. So 480. Okay, cool. So what does that do for a buyer? So it saves them $108. It drops from same rate. This is with 10% down, guys. FYI. So a little bit of mortgage insurance. Okay, so about 60,000 out of pocket. It saves them about $2,600 out of pocket to drop 20,000 in price, because everybody thinks if it's 20,000 off, I get 20,000 less out of pocket. No, because it's all scalable to financing. So when you look at it, just your loan balance goes down by a little bit, and then it's still not that much different out of pocket. But it's more of a psychological thing. So it's $108. Okay. So what if you do, number three, the third column is basically taking $500,000 from here and giving a $10,000 credit, towards the seller's rate. So instead of 5875, buys it down to 5%. Okay. So it takes that down and drops our payment to 2971, under 3,000, saves them 246. All right. And what is the effect? Like, in order to get the price drop that matches what this does, you'd have to get a $455,000 house, if you matched it to that. So that's roughly, not exactly to the penny, but just a good rule of thumb. So I need like a 50,000 price drop to match the payment, which is how we live every month, as in order to match that to 455. So that is that. So this is, ultimately, the strategy may or might be pertinent to your market. This is just one example. Of course, there's another angle to this, which I'll discuss in another video, about what happens if the price drops. And I did a video, if you search on my channel, about appraisal gap, using mortgage insurance to buy that down. That's kind of how it would be. You can take a portion of that seller buy down, buy out your mortgage insurance, and still keep your payment on. And I'll do an illustration on a future video. But go ahead and hit a like on this video, and go subscribe for more information on mortgages, current rate markets, and of course areas about moving to Florida. So this is just an example of the seller buy down strategy. If you wanted to figure it out, if you're a realtor on the listing side, or if you have a buyer in the market, and maybe be losing out, and you maybe want to make an offer, definitely give me a call. Go to dempseymortgage.com. Thank you so much for watching, and I'll see you guys on the next one.